Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis updated commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. I'll interject my financial opinions as we go through it together. And if you need help with anything, check out finding-value.com. That's where I dive deeper into all of these subjects and topics looking for potential investment opportunities. I think there's a lot of stuff on sale right now with the tax loss selling that's occurred, especially in the energy sector. So there's a lot of things that are down that I think look really good. They're trying to bottom. Some of them are starting to break out of falling wedges. So it's a good opportunity to look at those now than maybe later on with them being down right now. We do have a different discount that's going to be active for the holidays here for maybe the next week, week and a half. It'll run probably just past New Year's. The discount code is special. So special. Look in the description link below. It's 50% off just the first month only for a monthly membership and a larger discount on the yearly membership if you're interested in joining for a year. So let's dive in. Let's take a look, see what's going on today. Start with that DXY. This still looks strong to me. We've had a pretty good surge higher, downward facing pattern, surge higher, downward facing pattern, surge higher. We do have a bearish engulfing candlestick 2 days ago, so 2 trading days ago. But we're sitting on top of the pattern here. So this here is the pattern, and we're sitting on top of it. Some people thought that this was going to be an inverted flag pattern that we were going to break lower. But that wasn't the case. We broke to the upside, and it still looks decent. Now, in the short term, we could go sideways or slightly lower with this bearish engulfing here, and that is what we've got going on with the DXY. Yields continue to move higher, and it's going to put pressure on the dollar to go up. So the 2-year yield, again, this looks really good to go higher. We're up 0.5%. We are underneath this trend line, which acts as resistance. We did break out of that trend to the downside. So in the short term, we've got upside movement. Now, what I don't know, and no one knows this, but are we going to turn at that resistance and roll over? Are we going to turn on the 2-year yield and go lower? And the difficult part is we've got two conflicting things ramming each other against each other. We've got inflation and a weak economy ramming each other, like two goats ramming their heads together. What's going to win? I don't know. That is kind of where I'm at. Now, we can monitor this and watch it to see kind of what the outcome will be. Now, the 10-year and the 30-year are telling me that inflation is going to win out. The 2-year and the Federal Reserve are kind of more linked together. So that the 10-year on the long end, nobody wants this crap. They're selling it off and raising interest rates up, 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 up. That's broken out of the downtrend line, and that still looks incredibly solid to move higher. And then the 30-year also doing the same thing. That's broken out of the downtrend. It looks incredibly solid, and it is continuing to move on up. Looks very strong on different time frames. This is the monthly time frame. You can see the big breakout on the monthly. This looks really strong to move higher yields. So inflation's winning on the long end. I think the Federal Reserve can see that the economy is slowing down and they're trying to lower rates on the short end, but it's not exactly working. And there's the two goats ramming each other in the head. Or I guess they would be rams, right? We'll do rams. 2 rams ramming each other in their head. And inflation, I think, is going to win here. TYX, TNX ratio, we ended up going down a little bit. So a little bit of an inversion of this ratio that I watch. We're still at an incredibly low level, which means we're inverted, and we're staying inverted. Which means no tailwinds for gold. And with the dollar up, we're probably going to see gold move down. Bond prices continuing lower. Looks like absolute garbage. um, this looks like it wants to go lower. And it, guys, this looks pretty bad. I mean, this is your shoulder head, shoulder top broke out. We broke every uptrend line and support resistance line. Now this one's sideways. This horizontal line here, that one going across. We broke the horizontal. That means like this is no bueno. This is not good. And then this is an upward facing pattern that's broken to the downside, retest, boom, boom, boom. And we are heading lower. So I think rates are going to continue higher and bond prices are going to go down. That's what I'm seeing in the charts. The 2 and 10, we still have the yield curve uninverting on the 2 and 10, which means that we are heading lower. But here's the weird difference. Every time in history that we've seen this move, that's all through here, this history, those were all rates dropping. They were dropping and the yield curve, the 2-year, was falling faster than the 10-year. Here, this is the 10-year going up faster than the 2-year. That's called a bear steepener, which occurs very rarely in the markets, like 10% of the time. And now today we had the 10-year up 1.35%, the 2-year was up 0.5%. And that's what's causing the move lower. So that stagflation, I think that's what's going to be here. And we just haven't seen this type of condition very often. Now looking at gold, gold was down $18, stronger dollar, yields weren't going, in favor of gold. But it doesn't look bad. We've bounced off support. We've got a larger buying pressure candlestick with the small red candlestick. It looks good, like it's going to try to work its way sideways or higher. It still looks good there. Silver was up 0.9%. Doesn't look bad. We're above support. It's holding on. Platinum looking a lot better here. This one's looking juicy. We've got a squeeze here into the corner, and we have broken out of that pattern, that falling wedge. To the upside, it looks like we can maybe work our way on up over time. And then palladium also looking stronger, bouncing off support down here. I did say it was had a good chance of getting down here. It got down there, and we are bouncing off that support level. We'll see what kind of follow through we can get in palladium. GDX down. Looks like it's trying to do a little something. We got a little wick at the bottom there. We'll see. We'll see. The momentum is still down, but we'll see if there's any sort of attempt to try to turn it around. Generally speaking, this size of move will correlate with the size of move that could potentially come, which comes back to the support zone down here. And that support area is this down here. So that's probably where we're going to eventually end up, is the $32 range. GDXJ down 2%, getting some selling pressure. We do have a green candlestick with a little wick at the bottom. And again, the selling pressure will probably go somewhere down to the $40-ish range. In an ABC correction. And SILJ, it's going to do something very similar. It still looks bearish to move lower in the short term. And that's a flag pattern, potentially. XEU to gold ratio, it is trying to put in a bottom where gold mining companies outperform gold itself today. It was coming back, but this is right where we're at for support. We'll see if we can get momentum to the upside. Crude oil basically trading flat today, at least where it ended. We are trying to break out of this pattern, and to me, this looks like it wants to break to the upside. You get a breakout of the pattern, you get a retest, and then you get another move higher. So maybe gold and silver are pausing while crude oil is about to run. That could be a potential case. TTF gas up 3.6%, looking real strong. We are in an uptrend, higher highs, higher lows. We've got natural gas down in America minus 1.33%. And here we are breaking that kind of consolidation, we'll call it here. And we're working our way on up slowly. Boy, XOP, yeah, you know me. Crude oil was flat. XOP was up today, but the momentum is still lower. Can it turn it around here and work its way on up? That's what we're watching for. OYH is doing the same thing. We're down 1.5%. Momentum is still down. And can we turn it around? It's highly going to depend on what oil does, I'm sure, and what natural gas does, because if energy service, it's the services for both. Now, longer term, it doesn't look that great. We were coming on up and we've broken to the downside here, bearish engulfing, and we do have another bearish engulfing here, which suggests we could go lower in the short term. The difficult part here is we've got the rams ramming each other, against each other, a slowing economy that has inflation. And oil, it's got demand and it's got an inflation component to it. Which one's going to win? Difficult. Difficult to say. But we'll see with tax loss selling almost being completed here. We'll see what occurs in the 2025. Newcastle coal futures continuing to head lower. The momentum's definitely to the downside. And we'll see if we can pull on back maybe to support at around 105, which is a pretty big move lower if it gets down that low. We could also be doing a shoulder, head, shoulder. Sprott Physical Uranium Trust still within the pattern, down 0.72%. It's just chopping sideways. Uranium, it is pulling on back. It does look like it wants to head back to this support zone at $64 a pound. So looking at this from the bigger picture view, let's go all the way out. We are probably going to come back to that support zone where we've got kind of like this big shoulder, head, shoulder deal going on there. And we'll probably get a retest back to that X. URA up 1%. There we are today. Did bounce a little bit maybe off this support region where we're at. And, when we look in the big picture view, I've got the plane up there. This still looks good. Squeeze, breakout. And now we're just going through volatility as we work our way higher. URANUM up 1% as well. It's not a reversal candlestick. Momentum still down. And then URNJ, similar pattern. Momentum still down, not a reversal candlestick. Copper down slightly, but at support. We'll see if the support holds. And this is also, I'm sure, being subjected to multiple forces between inflation and between the economy. COPX up 1.1%. It doesn't look too bad. That's a bullish engulfing here. So we're getting a little bit of follow through from that bullish engulfing that we got on Friday. Iron ore down 1%. And we've got this squeeze going on. Big selling, smaller selling, smaller selling, smaller selling. And we're kind of going flat there. And that's squeezing into a corner, right into the corner there. So that still looks good. Now, could this break lower like this and work its way on up if we get a slowdown in the economy? It's totally possible. We've got aluminum down slightly, still within the pattern, or channel, I should say. Here's your channel. We've got nickel down 0.8%. This is getting a little bit heavy looking here, where we could head a little bit lower in the short term for nickel. Mu down 3.24%. It gapped lower in the morning there. There's the gap. Oh, dividend. So on these dividend payout days, probably an X dividend day. Yeah, X date, the 23rd. You're going to get these big gaps because people sell it and they take the cash, the $2.2 in cash. So it's not a legit move lower. It's a payment to the holders. Emerging markets up a little bit. Surprising that we had stronger dollar, stronger yields. KRE down slightly, but on support. TAN up a little bit, 1.55 with the big bullish engulfing the day before, trading day before. Looks okay. Lithium moving sideways. It's trying to gain support at this downtrend line to work its way on up eventually. REMX down 1.5%. Momentum is still down. There's just people do not want to be. They're just not buying REMX. Money flows have been rough here. Baltic Dry Index up 1.4%. It's trying to turn, but it's got some work. Momentum is still down. XHB down 0.24%. Not a big move in either direction. Momentum is definitely lower. And with the interest rates continuing to move up, this could just be a consolidation where we eventually continue lower. Russell 2000 working its way sideways. Nice little reversal candlestick here. It's a bullish piercing. We'll see if it can hold. S&P 500 up a little bit. Now, if this compresses up here like this and you get a move like that, it's a bearish pattern. So we'll see if we get that pattern or not. I can draw one in there. If it squeezes up, we don't know that yet. So something on the lines of that. NASDAQ doing something very similar. We'll see if that's a bearish setup or not. It's too early to tell. We don't know what the follow through is the next few days. SMCI up 2.5%. It's just going to track sideways for a little while. NVIDIA up 3.7%. Pretty strong move for NVIDIA, but again, we're underneath the pattern here that's broken out. Retest lower, and we'll see if it can reverse that setup. Bitcoin down 1.1%. It's right at support. You know, is this the start of a big move? You're at support, so we don't know that yet. And that support could hold, and we could easily work our way on up. We've got stronger selling pressure here, less selling pressure, less. These are small candlesticks. So as it comes to support, it's not like we're coming down and falling off a cliff with a ton of force and momentum trying to break through that support area. So again, we have to see some follow through here in either direction. And Ethereum looks strong here at support, and that's sitting on top of its pattern. So this looks good to go higher. It's got a bullish engulfing today, and everything's looking pretty strong. MicroStrategy is selling off about 8.8%. We've got the buyers and sellers duking it out here. The buyers came in, pushed that higher there with that big bullish engulfing, but we did get some selling pressure today. So the buyers and sellers are duking it out right at this time here. And then the VIX has been pulling on back for the volatility S&P 500 index. So that's what we've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you guys are interested. I mainly focus on a lot of commodities because that's where everything is cheap. There's some other sectors too, precious metals, commodities, energy, shipping, dry bulk and tankers, stuff like that. I look at those sectors because that's what's cheap, and I think that's what the cycle is going to move into. So I'm looking out in the future and saying the cycle is going to position into this. Now, that doesn't mean that technology is done necessarily going up. It could definitely still go up, but that's not where the value is. So your risk reward and the symmetry in technology, although it can go higher, it's not there. When you look at the risk reward and the asymmetry in like energy companies, they look ridiculous. So the thing that you have to balance here, for most people at least, is do you want to play the short term and try to capture a small market move? Or do you want to buy undervalued, big chart patterns that are scribing out mostly the right-hand shoulder of an inverted head and shoulders, where you can play a 10-year move with gigantic opportunities, 10 times your money, 20 times your money, maybe even bigger, we'll see. And that's kind of what draws me into those. It's the asymmetry and the potential moves that I could see coming over the next 5 to 10 years. I don't really mess around with 20%, 30%, 40% price moves. They're not large enough, and if your downside is as big or bigger than that, which I think a lot of the technology companies, they might have 30, 40% upside, but their downside could be more than that. So your symmetry is all lopsided. It's not worth it, in my opinion. But you guys can do what you want to do. But that's what I've got for today. We'll catch you guys next time. This is Finding Value.